So here is how I made about $135 in about 8 trading days with Micron. So on June 17, when Micron was trading at around 32.72, I bought 100 shares of Micron and then immediately sold the call option at a 32.5 strike, collecting about $1.40 per share, expiring June 28, so expiring this week. So basically I bought Micron because I felt that it was very undervalued. First of all, just because of the PE ratio and also because of the charts. It's always going down. In addition to a PE ratio so low and revenue's relatively growing. So I felt like there was a better chance that the stock goes up than it goes down. And just in case, I sold a call option against it so that even if it does go down, it's not a big deal. I mean, I'm protected on the downside a little bit, but with the call premium that I collected. So I bought it at 32.7 about the stock, but I collected a little bit more than $150, but sold at a 32.5 strike, making my cost 31.10. So on June 17, when the stock was trading at 32.4 or 32.5, I only paid 31.1 to buy 100 shares of Micron because I collected a premium from selling a call option against it right away. My strike being 32.5. So come June 28, if Micron is trading above 32.5, then my shares will get sold at 32.5, but I'm okay with that because it only cost me 31.1, so I make a profit of the difference. If the stock is trading below 31.1, then yeah, I made a bad trade. I still own the shares. I just have to wait for the stock to rebound. And while I wait for the stock to rebound, I could sell another call option at a 32.5 strike price once the first one expires. That's in the case where the stock is trading below the 32.5 strike. But there was earnings today or yesterday. And of course, the stock rallied up as expected to 37 today. So making my option in the money, of course, and for sure my shares would get called away come June 28th. So come Friday, my shares would get called away at 32.5. So instead of waiting 2 days for my shares to get called away, I decided to just close the trade out today. So I closed it at 32.45. So I basically bought it at 31.1. This purchase here of 31.1 includes the shares that I bought minus the call premiums that I collected. So that's why I'm at 31.1. I did that in one trade so that I can save on commission. So this actually cost me $5 plus 75 cents. So this trade here cost me $5.75 in commission. And then to close it today, it cost me another $5.75. So basically my profit on this trade on 8 trading days is about $135 minus $11.50 in commissions. So that's a 3.9% return in 8 days. So let's just say even 2 weeks. So on an annual basis, it's 103% return per year. That's if I'm able to make these types of trades consistently. So the capital that I got back after closing this trade, if I use it right away to do a similar trade, then I can consistently make that kind of return. So with Questrade, to close a covered call position early, you simply go to your positions. And let's say I wanted to close this covered call trade early, or let's look at NVIDIA here, for example. So NVIDIA is another covered call trade that expires this Friday. So if I click on it, first of all, it has to be grouped by strategy in order to see it this way. And then if I click on NVIDIA and then click on create order, the order entry updates automatically. And then I could place an order to sell or close the position. So in this case, I can actually close the position at a little bit over 155, which is great because my strike price is 155. So that's the max that I can get for it come expiry date. I bought this stock at 155 or 154.92. I immediately sold a call option at a 155 strike, collecting $3.42, so $342. And that's in 1 week. That's expiring June 28th. And when Micron rallied, NVIDIA rallied. So now I can actually close the trade early at the 155 strike because the stock is trading at about 159 or even 160 right now. So with this example, that's a 2.2% return in 1 week. So multiply that by 52 weeks, that's 114% annual return. So the limit price for closing a covered call trade early is always going to be the strike price that you chose to sell your call option at. It might not be exactly that strike price, but it'll be very close to it. So you have to decide if it is worth it to close it early or not. So in my case, with Micron, I closed it early. I closed it at 32.45 instead of waiting until Friday to close it at 32.5. So basically I missed out on $5, but I decided to close it early. I didn't feel it was worth it to wait 2 more days for an extra $5, especially that this is in my margin account, so I'm probably paying interest on it. And I felt like I could use the capital to do something else with it. So yeah, just wanted to share with you how to close a covered call trade with Questrade and a profitable trade I made with Micron in less than 2 weeks. So if you have any questions, leave them in the comment section below and check out the referral links in the description below. Thanks for watching.